Well, almost all the traditional asset markets are 200 to 300 trillion. We're going to get there in probably 10 to 15 years. I mean, this will be the fastest accumulation of value the world has ever seen. Fastest and largest. Bigger than oil, bigger than the internet. It's just it's a very, very different thing. When you've got a very indebted economy, if you raise interest rates on people, it hurts fast. Got a world where we are so sensitive to rises in interest rates that it's very difficult to control economies, and central banks don't really have many interest rates. We talk about a lot of interest rate rises, but we're not even at 3% yet. So it's barely anywhere. So we've got ourselves in this very fragile system where anything can break it, and governments everywhere. We've just seen it with the UK, we've seen it with Japan. Everyone's trying to paper over the cracks. It's the end of the entire financial system and most of the global government bond markets. So it's an extraordinary moment in time we're living through. And it was that living through and predicting this in 2008 and 2012 was why in the end I realized I had to do something about it. It was also my journey into crypto as well, was that period in time, realizing we needed to find another answer, because this is not the answer. Debasing currencies endlessly, taking on more and more debt to try and keep the thing going, doesn't work. Right now, it's actually just playing out very simply in the bond market and the currency markets. So smaller economies, less of an issue right now. The actual issue is these big economies like the UK. And you can see it in the currency markets. The next potential shoe to fall here is Italy. So Italy's voted into yet a new government. Italian bond spreads versus Germany, so i.e. a measure of their risk, is going up. And if that gets out of control, it's going to force the European Central Bank to backstop it again, which they've said that they will do. What does that mean? That means that they will start buying more Italian government bonds. So that's more quantitative easing. So in Japan, about 70% of every single government bond is owned by the Bank of Japan. They basically own the bond market. And one day we will come in and they will just write off all the debts, call it a debt jubilee. But usually when that happens, the currency collapses. So I think watching what's happening in bond markets, rising of interest rates is concerning. And that is part of this component. The other is watching the major currencies and looking at that. And then it's looking at, I would use the ISM survey. What we're looking at is that rolling over and coming below about 47, which marks a recession. I think that happens very fast. So the further growth goes down, the more the risk goes up of somebody blowing up. But on the flip side, the higher the probability of the central banks starting to print money again. So we're at this point where everyone's at max fear, but max fear probably means the probabilities are starting to rise of the central banks. And we've seen that again with the UK this week or last week. Big debate. I'm on the opposite side. So everybody thinks that inflation is the enemy. Inflation is one of the most backward-looking economic indicators, and really the inflation now was baked in the cake 18 months ago. In global macro analysis is to look forward 18 months and say, what will the world look like? Just the rate of change comparison of price changes is likely to lead to very low inflation numbers. Doesn't mean prices come down. But then I look at the oil price come down from $120 to, where are we now, about $80. We've seen stuff like steel down 70%, lumber down 70%. Almost all commodities have come down. So those supply shocks have gone. The other supply shocks you used to be able to see in shipping prices and stuff like that. Well, shipping prices have come down. So almost all the forward-looking indicators of inflation are coming down. So now the market's fixated on wages and rents. My guess is if we were to have this call in a year's time, inflation is closer to 2% than it is to 9%, which is a shocking turnaround in events. I think inflation goes negative. So if I'm right that growth is imploding and inflation is about to evaporate, then the probability of the central banks coming in yet again to try and support growth goes up exponentially. Let's assume I'm wrong then. So could inflation be sticky at around 4 or 5%? That's where the market is talking about it on Twitter loudly, all the economists. But I'm looking at the 5-year break-even inflation rate, where inflation rate is expected by actual market participants in 5 years' time, and it's currently at 2.2%. 1 year break-even inflation is 1.75. So the market's actually pricing in something very different than the narrative, but actually a big shock compared to what people think, because we've been told inflation, 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 that's the fear. I think the next round is falling inflation, falling growth, rising unemployment. People always anchor on the past, right? There's a heuristic bias within macroeconomic forecasting, and generally it's to do with what is your big bogeyman? What is your fear? Argument over who's right, because these baby boomers have been saying, we want to prove that we're right, that this was the wrong move. And they anchor on the 1970s, saying inflation came down after the oil shock of 74 and then went back up. However, this time around, we're missing those baby boomers we started this story with, who turned 30. That we don't have that more. We've got the largest number of retirees in all recorded history because of this fear, because nobody wants to be 80 years old and be destitute. So you become naturally incredibly cautious, which is a huge drag on growth. When somebody tapped me on the shoulder in 2012 and said, have you looked at Bitcoin? I'd seen Bitcoin. I'm a macro guy. It's my job to see new assets as they rise. And the moment I saw it and it explained to me how blockchain worked and what Bitcoin was itself, I sat down, thought about it, wrote the first ever macroeconomic strategy paper about Bitcoin in 2013, and looked at it versus gold. I said, well, if this is digital gold, so this is the new version of digital gold, and we can build the entire financial system rails on blockchain, so we know who owns what, which is the key issue I saw at the massive global level. Okay, this is valuable. So I compared it to gold and got a valuation of $1 million. And Bitcoin was $200. Okay, this is the best reward you'll ever see in your entire life. So then I always discount myself for being an idiot. So I said, I'm 90% an idiot, maybe 10% right. And then I've been on that journey in crypto from Bitcoin, then seeing smart contracts rise, seeing how every contract, even me coming today on this Zoom, is essentially a contract over email. And, you know, speaking with you personally is like, yes, I will do that. It's a contractual term. Every ticket, every hotel room, everything's a contract. And then you start realizing, oh my God, this is all going on blockchain rails. So not just the financial system, not just a currency, but basically every part of our digital world is going to end up on blockchain technology. Google or Alphabet's a classic example of network effects, right? It's a network company that has allowed application layers to be built on top of it. So what you've got is enormous value. The difference here in this, what makes this the fastest adoption of any technology in all recorded history, it's twice the speed the internet got adopted at, which itself was the fastest adoption of any technology in history, is because unlike Facebook, if you're a Facebook user, you get to use the Facebook network. But that's the only benefit you get, while the shareholders make all the money. In this new world, if you're a token holder, you get to participate in the network and also the value accretion from the network. So it becomes super viral in how it works. Clear up this macro situation that we talked about. Every large corporation, anybody with brand, community, or any of these is working hard, like you guys are, on figuring out what does Web3 mean for us. A lot of people don't realize Ticketmaster has issued more NFTs than any company in the world, 10 million NFTs. So there's people already catapulting, but all the big Web2 players are involved. Everybody in the financial system is involved, but everybody knows that this is where it's all going. So we're seeing, I've never seen anything like it personally. It's kind of a little bit like the internet, but it's just, as I said, faster paced and actually larger in scope, which sounds crazy, but it is, because it accrues value itself to these protocol layers. Well, almost all the traditional asset markets are 200 to 300 trillion. We're going to get there in probably 10 to 15 years. I mean, this will be the fastest accumulation of value the world has ever seen. Fastest and largest. Bigger than oil, bigger than the internet. It's just it's a very, very different thing. It's quite the phenomena. So the point being is, as soon as the macro clears up, like you guys and everybody else, everybody's investing in VC in this space already. So everyone's getting a first look. What's happening? Where is it going? How do we get involved? So the VC money of $60 billion that went in the last 18 months, because of the speed of the cycle in crypto, we're going to see a whole lot of products and new changes and new innovations coming in the next 6 to 12 months. And we'll move the whole narrative forward exponentially yet again. I'm interested in two levels, which is why I started those two businesses. Exponential age asset management. Every investor in the world is going to invest in this sector. It's probably something like 0.5% or 0.25% or something of people's investments, and it's going to get much larger. So how do you capture that? That's why I started an asset management company that invests in digital asset hedge funds. Okay, so that's part of the trend. Much like, again, you guys at corporate level through the VC arm will be investing in VC companies, so you're capturing the trend. The other thing is the big light bulb moment for me was realizing that tokenization is going to unlock intangibles on global balance sheets. So what do I mean by that? Intangibles are things like brand and community. So every firm is incentivized to do it, which is why you guys are looking at it, because it actually becomes a way of tokenizing community or network effects. So I'm really excited about the tokenization of culture. We all live our life. It defines us as human beings. What are the big cultural identities? Music. I'm a big music fan. Music is a cultural identity that we have. Secondly, fashion. Fashion is a cultural identifier, something people are passionate about. Thirdly, sports. The job is to help giant corporations with giant communities tokenize this culture, because that is a huge unlock.